Candidly, I had been sort of scarred by the wealth management industry. I've been wildly under-impressed by it. Even though ICONIQ is just 13 years old, the work that went into building ICONIQ preceded our first day as ICONIQ by almost 10 years. We had done a few one-off consumer direct investments. Alibaba, JD.com. Our clients became public company CEOs. They were no longer allowed to opt in to a direct investment that they wanted to do. So we raised a fund. It allowed us to find companies like Adyen, Service Titan, Procore. The list goes on and on and on.
You really were ahead of the curve compared to, Lightspeed is now a RIA, General Catalyst stopped calling themselves a venture firm and even bought a hospital. You almost did what they're now doing, where you've built the family office relationships, managed the money, built the growth firm, Impact. How is ICONIQ Impact going to approach things differently?
Instead of thinking about what can you as an individual family or couple do for climate change, what could 20 tech founder families do for climate change? 6 months later, we were able to build the first of its kind $50 million Ocean Climate Collaborative.
The emasculation of what feels like America's culture and how it needs to revert.
We're in this game of pinball. We are in a culture of extremism on both sides.
I'm talking good, bad, ugly, because you've given me a lot of good PR stuff.
We're being honest.
You won't find them humble bragging or causing a stir on X. But behind some of the biggest tech fortunes in the world, there's ICONIQ. Quiet by design, ICONIQ Capital manages the wealth of Silicon Valley's elite. With over $80 billion under management, they've built a modern financial empire. Part family office, part venture powerhouse, part philanthropic force. I spent the day with ICONIQ co-founder Mike Anders, someone rarely in the spotlight, yet deeply trusted by the world's most powerful builders to steward not just their money, but their legacies. Let's get into it.
All right, Mike Anders, the man behind the ICONIQ firm that we've heard representing amazing tech founders, and you are now helping them steward their money, steward their impact, scale their impact, and do so much more. What do we need to know about your upbringing to understand the leader we have here today?
I'm the son of two professors. My parents taught in the medical school at Stanford and the medical school at Brown. While I was born in New York, I quickly, without much of a say, moved to Palo Alto, California. My parents taught at Stanford until I was 12 or 13 years old. And then with even less of a say, they moved to Providence, Rhode Island to Brown University. My mom was first-year medical student. I made the front page of the papers because I was born her first year of medical school and she didn't miss a class. And my dad had marched with Martin Luther King in the 60s as well. So I grew up with the values of fairness, equality, decency, and a deep belief in education, even though I wasn't a great student, if we're being honest. It wasn't until a very random moment, which I can remember as if it was yesterday, I was bored and disinterested and channel surfing, and I saw on the screen of C-SPAN this unbelievable, charismatic candidate for President of the United States named Bill Clinton, and he was announcing his candidacy. I was so inspired by this guy's vision and his ability to articulate the vision. I was like, I wonder if I should do something in public service. And one of the things that I got was an opportunity to work for a summer in between my junior and senior year for then U.S. Congressman, now a U.S. Senator named Jack Reed from Rhode Island. He gave me the advice, I was 20 years old, that if I really wanted to go into politics and be a public servant, which he believed I would be good at, that I should start outside of politics. You'll actually have some worldly experience that would be relevant, make you a better lawmaker. And the day of graduation, I was on an Amtrak train to New York City.
That advice would take him to Wall Street, but it wouldn't be long before Mike realized he needed something more. What began as a pragmatic detour soon turned into a personal reckoning. Inside the glass towers of New York finance, Mike found success, but also disillusionment.
So my first job at Fidelity Investments, even though I had nothing to do with it, Fidelity had just rolled out the first commercial donor advised fund. And I was really amazed by it. It seemed like such a clever, impactful idea. Fast forward a few years, I started a company that was building these donor advised funds for all the large financial service firms that frankly should be offering philanthropy to their clients but weren't. And when I dug into it a little bit more, I realized it's really cumbersome to set up. It's not the core competence of any big bank. And so we created this company that would provide a white labeled, outsourced, turnkey charitable product that JP Morgan could brand and use JP Morgan Asset Management, but market to their own client base. Long story, very short and sad. The company did sign up all these major banks as clients, but never really got off the ground in terms of the private client advisors marketing the product to their high net worth clients. It just didn't pay the brokers enough. It wasn't in their core understanding or competence. And so the products all sort of sat on the shelf while Fidelity continued to raise billions and billions and billions of dollars, largely from JP Morgan and Goldman Sachs clients. And then we ended up selling that company for peanuts.
A quick note. Donor advised funds, or DAFs, are like charitable savings accounts. You get a tax write-off now and direct grants to charities over time without the hassle of a private foundation. In 2023, DAFs held over $250 billion. Fidelity had the first mover advantage, raising billions. Mike's company tried to white label DAFs for big banks, but it never took off. Why? Brokers didn't push what didn't pay them. DAFs have lower fees and assets leave brokers' AUM, reducing how they get paid.
And I went to Fidelity, to their charitable services group, and led up kind of the fundraising efforts for Fidelity's charitable platform, which also included a pooled income fund and an outsourced foundation product. In that role, I started meeting some very affluent individuals, all of whom were very eager to talk about their philanthropy. And occasionally, one of these individuals or folks around the ecosystem would bring up this guy, Divesh Makan. And candidly, I had been sort of scarred by the wealth management industry. I've been wildly under-impressed by it. And so the idea of joining a wealth management platform was really uninteresting for me at the time. But so many interesting people and smart people and people I admired so much kept telling me I had to meet this guy, Divesh. And so in 2005, Divesh and I went for our first cup of coffee. And it was really love at first sight.
And soon, Mike would begin to shape what would eventually become ICONIQ. But first, they had to challenge the very idea of what wealth stewardship could be, starting with one simple idea.
What we figured out for us is we wanted to be the best caddy in the world to the best golfers in the world. And we knew very early on that being the best caddy was an honor in itself.
How do we surround ourselves with clients that are much smarter than we are, much more relevant than we are? How do we create a community of exceptional founders and CEOs who, by listening to more than we talk at, would give us a view of the world from their perch? And the collective wisdom of this group would be pretty informed, pretty unfiltered, and collectively would help us shape a view of where the world was today and where it was going. Over time, we started realizing that these clients are not just exceptionally smart, but they're highly relevant. They're going to see a lot of really interesting deal flow. And in isolation, the tech guys would probably see a lot more tech deal flow. The consumer guys would see a lot more consumer deal flow, but collectively, and in sharing this deal flow, they would build diversification across really interesting and very unique and hard to seek out deal flow. And ultimately, having joined Divesh first at Goldman and then us moving to Morgan Stanley together, we realized, one, to truly be independent and objective, you can't be at a big bank. And second of all, our client base, through a lot of luck and coincidence and timing, had become so significant that they all wanted to be on an independent platform as well. They did not want to be at a big bank. And so in 2011, we set out to create ICONIQ. But truth be told, Divesh and I have known each other for over 20 years and had started building this business even in the confines of a big bank platform.
You really were ahead of the curve compared to, Lightspeed is now a RIA, General Catalyst stopped calling themselves a venture firm and even bought a hospital. You almost did what they're now doing, where you've built the family office relationships, managed the money, built the growth firm, impact. Now you have the data centers, all of that. Talk to us a little bit about the strategy, the through line here, did you see it then 2011, the writing on the wall that this is the direction that wealth is going to dictate in some way?
I don't think we could have started ICONIQ in any other geography in the world. And I'm not sure we could have started it at any other time in the world. I think there was something in kind of the mid 2000s where collaboration, social, partnership were emerging themes that actually meant something. Silos were a bad thing and community was a good thing. And obviously Facebook was kind of a pillar of promoting community. And so there was something about the timing and the location that allowed ICONIQ to become ICONIQ. And I think there was something humble in the earliest of days about ICONIQ that understood collectively a group is going to be smarter than any one individual. And if we can get a collective group of exceptional founders and CEOs, and not just Silicon Valley, but consumer, energy, transportation, US, non-US, old, young, that diversity of thought was going to help us become smarter as long as we were better listeners than we were talkers. And so that DNA, I think, is what ultimately drove ICONIQ. And then, of course, who would have thought the Facebook would become Facebook? Who would have thought that, we would have just been at the epicenter of these businesses starting from one day and then the next they're tens of billions of dollars of value, hundreds of billions of dollars of market cap. So the relevancy of the ICONIQ ecosystem just became more and more of a juggernaut in driving interesting deal flow and also helping us build internally the team to source and vet that deal flow in a really intelligent way. And then I think too, as you start listening more and more and that becomes core to who you are, you start picking up patterns, you start picking up themes. So one of the early themes that we picked up on was we had done a few one-off consumer direct investments, Alibaba, JD.com. There was a number of these. And one, we realized that as our clients became public company CEOs, they were no longer allowed to opt into a direct investment that they wanted to do, whether ICONIQ sourced it or someone else in the ecosystem sourced it. And so we raised a fund and we brought in my partner, Will Griffith, to drive the building of that fund. And that now we're in our 7th vintage. There's 100 people at ICONIQ dedicated just to our, venture, growth equity, tech investing. But we saw early on from the consumer that it was a very interesting opportunity for us to migrate to sort of enterprise software. And so that was a really interesting shift in 2013, where the vast majority of our investing over the last 10 years has not been in consumer, where we had done a few deals, but now is in enterprise software. Yeah. And that just was, again, really great timing. It allowed us to find companies like Adyen, ServiceTitan, Procore, Snowflake, Datadog. The list goes on and on and on. And so again, it was sort of listening to the ecosystem, listening to the client base, seeing these patterns, and in this case, making a pretty bold and deliberate move into investing in enterprise software. And as we began investing more capital into enterprise software, we began seeing the migration to the cloud. And we were living this every day. Yeah. And so as we began spending time again with more of our clients, for example, a couple of the CEOs of the hyperscale players, we saw the migration to the cloud, and we were hearing from them that there was no way they could keep up with the demand on storage. And so as innovative, thoughtful sort of business creators and allocators, our first impulse was, who do we allocate capital to that's investing heavily in the data center space? And there wasn't anyone at the time. There was large, infrastructure funds where a percentage of the fund was dedicated to data centers and the rest was toll roads. But there wasn't anyone dedicated to investing just in data centers. And we saw this again from this client base and from the investing we had done in enterprise software, that the cloud was going to be a huge place to invest and that data centers would be those railroads. And so we began building data centers, and we raised our first fund dedicated just to the building of data centers. And we really decided early on that we were going to focus almost entirely on the hyperscalers.
You've seen the mobile wave, you've seen also the different crashes, 2016 high of SaaS enterprise and more. Now we're on to the next wave of AI. What are your thoughts?
First of all, it's no secret, but AI has become top of mind for, I think, most everybody at this point, and for good reason. If it was even a year ago where people were skeptical of how real it was and what would the implications be, I think there's very little debate about how real AI is, how disruptive it is going to be. Just taking that seriously, I think, is important. There's lots of ways to look at AI. There's the foundational models, LLM, small language models. Our focus has really been, and no surprise for ICONIQ, has really been on sort of the application layer. Where is AI creating product that has a use case in business? Either creating efficiency, allowing for employee productivity, margin expansion. These are the areas where we've looked at. And so we've spent a significant amount of our time over the last 2 years diving deep into AI, but not so much from the foundational standpoint and more from the application layer.
I guess you're speaking to sort of the picks and shovels approach, really, of taking, what's going to be AI as a horizontal application in many ways. You've invested into category leaders like BetterUp, Calendly, right? Canva. How would you see AI being core to these category leaders?
Around the time we started ICONIQ, there was a lot of folks that believed investing in technology was a vertical. Some point between then and now feels like most people agree it's no longer a vertical, it's a horizontal. It really doesn't matter what business you started. You founded a widget company, it's now a technology company that sells widget. And so there's this horizontal layer that makes every single company, like it or not, a tech company. And we see AI as being another layer in that horizontal tech stack. And so we think every company will be an AI company. And what's been fascinating for us is of the 150 or so companies we've invested in over the course of the last 10 years, most of them were not AI companies. But now every single one of them is transitioning to become an AI company. And as we sit and meet with these companies on a regular basis, we have an AI scorecard. How quickly are you embracing AI? Show us how you're adopting AI tools into your traditional business. If you look at a company like Figma, which was not an AI business, but now Dylan will talk openly about the fact that AI is raising the ceiling and lowering the floor for developers to come in and effectively use Figma in ways that they weren't able to do just a couple of years ago. And then we look at companies like Writer or 11 Labs. These are pure AI native businesses, but again, businesses that are solving a real problem, creating real productivity in the workplace, efficient workflows, allowing for margin expansion. And soon we see this as even like new product development ideas are going to come from AI. This is the future in our opinion.
How do you differentiate between hype and substance here?
When you're looking at investing in a company, an AI business, you want to really dive deep, avoid the hype, and get into the substance of what's the adoption of their product? How are they growing? And of the many, many, many AI businesses that they may be competing with, how are they stacking up in terms of usability and use case and adoption relative to their peers? And I think it's very easy to put money into AI right now. It'll be just as easy to lose money in AI. And I think what you really have to do is navigate through that hype, because there is an enormous amount of hype that is not going to translate into success, and yet there's going to be enormous wealth creation and business productivity created through AI.
In a space clouded by noise, Mike and his team are focused on substance, not splash. They aren't chasing trends, they're backing builders. So I asked him, what separates the companies that actually make it?
What is like the common thread among, some of the big names that you've invested in, from Figma to Aiden?
What we're really looking for is customer adoption, and then a lot of diligence calls around users of this software, this business. How are they using it? How are they finding it? What's helping their business? So there's an enormous amount of work that goes into validating the product, the efficacy of the product, the likelihood of continued growth of the product. And then also too, we have a network beyond just the immediate ICONIQ client base of some of the largest single family offices around the planet and sovereign wealth funds around the planet. And so when we invest in a company, you also get the ICONIQ network behind you. And so when we look at investing in a business, one question we always ask is, can we really add value here? We don't want to just be a capital provider. We want to be a partner to their business. We want to help them think about growing their board. We want to help them think about key executive hires. And we certainly want to be very active in making customer introductions and helping generate ARR and inject more energy behind the growth that they were already seeing.
Mike and his team have built a front row seat to the evolving tech economy. And today, that vantage point has never been more critical. From macro uncertainty and market cycles to the AI gold rush to the question of values in corporate culture, Mike has seen it all. So what does he make of this very moment?
I had 20 years less gray hair than I do today. And so winning that trust early on was certainly one of the hardest things we had to do. Starting ICONIQ since then has had less friction because we had the trust of clients. We had a track record of delivering for them. And we had really this network that we had begun to use for this information edge, this access edge. And so day one of ICONIQ, while it was not without bumps, certainly didn't have the early stage hardship that comes with any, startup business, if you will. But of course, along the way, even with an ICONIQ, there were bad hires we made. There was a couple businesses we started and didn't work out. And as long as you take a step back and have an honest assessment of what went wrong, why did things not work out like they did for our growth business, then you get better, then you get smarter.
So what was the hardest moment in the ICONIQ journey that you can speak to?
I think one of the hardest moments of the ICONIQ journey was dealing with, the financial crisis in 2008 was just a very, very tough time because it was so much uncertainty, not too dissimilar to what's going on right now with, the tariffs and the confusion over what's going on. I think whenever clients are panicky and stressed and are worried about their own business, not just their portfolio, there's a level of stress that you unnecessarily have to absorb or necessarily have to absorb. We've had a few curveballs that were thrown at us over the course of the last 10 years that certainly caused enormous stress. And also, too, a lot of these things turned out to create enormous opportunity for us. I think being an entrepreneur is accepting things that are not right, not just, dealing with the curveballs that are inevitably part of starting a company, but then figuring out how to turn that into something constructive.
So when you think about the state of the market, we touched on this briefly, but with the new administration in full force, the uncertainty that is very much alive. I mentioned I'm heading off to Europe after this, and the anti-wokeism is very, very real in the minds of investors, including family offices. Mm-hmm. Thoughts on state of the market and how we should behave as investors?
Yeah, I'll answer the first question. I think right now there's a general sense of confusion. And I think that there is no sort of clarity about what's happening because so much of the news feed is changing day to day, if not more rapid. What's been interesting is I've been in and around the investing world for 30 years. And was in Paris working for Société Générale when the euro launched the euro. I was working for Société Générale when the Russian currency crisis in 1998 happened and the Latin American debt crisis and when long-term capital management failed and the dot-com bust and the financial crisis in 2008 and COVID. And in any of those financial crises, the government, multiple governments were there as a rational backstop. This is the first crisis that in part is being caused by irrational governments and the uncertainty that they're creating. So to have clarity, to have answers right now is dishonest. So I think what you do is you proceed with caution and you don't change the course dramatically from where you are.
So from state of the market, let's talk about state of corporate culture. There is a lot going around with the emasculation of what feels like America's culture and how it needs to revert. I know you care a lot about race relations and diversity, equity, inclusion. Thoughts on that, and especially ICONIQ Impact's role in this?
Yeah, I think, we're in this game of pinball where the ball is just being knocked around from both sides. We are in a culture of extremism on both sides. And I think what we need to find is rational ground where, we can continue to promote long-term goals of racial justice, gender equality, diversity. These are all things that ICONIQ stands by. They're actually part of our values. And at the same time, we need to make sure that, business isn't being driven by operatives being set by people that don't understand business at all. And I think that's part of the challenge of what's going on in the country right now is, we have been let down by government over decades. And I think what we need to do is figure out a way where we can reinvest in America, reinvest in education, and hold our lawmakers accountable to some basic standard. Because at this point, we've got a whole issue we talked about earlier about AI, but government proved their inability to regulate so much of what happened with social media. So how is government in its current state going to be able to regulate something like AI if it needs to be regulated? And so I think right now, these are the issues. And I think it's less about wokeism, anti-wokeism. It's more about fundamental rational thinking that applies good business environments for people to thrive and succeed, and at the same time upholding values like diversity, equity, inclusion, gender equality, and racial justice.
Amid the noise of headlines and the chaos of uncertainty, ICONIQ's approach remains clear. Listen closely, move deliberately, lead with conviction. But for Mike, there was one question still unanswered. What could capital do if it was mobilized not just for returns, but for good? That's where ICONIQ Impact comes in, a platform built not just to give, but to reimagine how giving is done. And at the center of that vision is Mati, a force in global development and the co-architect behind ICONIQ's next frontier.
I really started my career in poverty advocacy work, grassroots poverty advocacy, thinking about how we can encourage the public to leverage their voice to actually shift policy around extreme poverty. I spent time in the field in Burkina Faso working on education policy, in Kenya and Uganda working on campaigning for greater access to sexual and reproductive health and rights, access to basic contraception for women and girls. And once I started that work, I realized just the sheer need for folks to dedicate their lives to this space, which I never thought I would be, but really figuring out how can a global investment firm that works to support some of the world's smartest tech founders, how can we leverage that for greater impact at scale, and really built a platform for large-scale collaborative philanthropy. Instead of thinking about what can you as an individual family or couple do for climate change, what could 20 tech founder families do for climate change? And suddenly, you've got 12 families raising their hand and saying, hey, we do want to work on the ocean climate nexus together. And what could that look like? And that's a real example. 6 months later, we were able to build the first of its kind $50 million ocean climate collaborative, leveraging some of the smartest people in the space, people who dedicate their lives to shipping decarbonization or changing the alkalinity of the ocean to make it absorb more carbon. And so by both encouraging co-funding and partnering with the folks closest to the issues, it just accelerates not only your giving, but it accelerates your learning. And so by the end of it, you've got a crash course in ocean climate change, ocean climate giving, and you've met peers that you trust. And you ultimately know how to be more strategic in your giving moving forward because you've leveraged a really smart team and a strategy that works. Because if you do it alone, it continues to be scary. But if you see your friend that you trust and who you're maybe on a board together, or maybe you've worked together doing something really big and impactful. And I'll give you a really specific example. One of our first efforts was a $10 million refugee award, finding like the best refugee resettlement organizations around the world. And it started with one family. And we did this beautiful call with the family, and the wife had spent time in a refugee camp in her childhood. And we invited 20 families to listen in. And by the end of the call, we actually had 5 other families so inspired that they joined. And it was really easy for them to join, and it was easy for them to join at scale, because they heard from a trusted source, they understood the process was fair in terms of finding these exceptional organizations, and it just made it feel a little bit less scary because they were doing it alongside a friend. And so that was really the genesis of the CoLab model, which is our collaborative funds, which is at the most basic level, very simple.
Since its founding in 2019, ICONIQ Impact has deployed over $500 million, and the results have been nothing short of transformative.
We actually had an incredible organization write to us that we funded doing education in Tanzania, and they said, thank you so much for your unrestricted grant. For the first time in 20 years, we were able to buy tables and chairs to hold our meetings on tables and chairs instead of on the floor, right? And you hear that and you think, oh yes, that makes sense. You need to fund operations for an organization. And it was just one of those examples of, you do need to really embrace an approach to say, if I'm going to fund an organization, I want to trust the leadership, I want to trust their vision, and I want to trust them to know what's right.
How is ICONIQ Impact going to approach things differently?
It was an idea that we had because we thought silos are bad. Silos create ego, silos create inefficiency. And so the first premise is, how can a group of really smart people who share an interest, this is not to say everyone has to care about ocean health or gender equality, but those that do shouldn't be trying to tackle these issues from scratch and on their own. And then, as I mentioned earlier, I think ICONIQ really has an opportunity and a moral responsibility to bring our client base around a table and talk about existing solutions that work and how we're going to have a coordinated effort to drive real lasting change. The answers are there. The capital is there. It's unlocking the capital to the existing solutions and answers in a really timely manner.
ICONIQ Impact isn't just another philanthropic arm. It's a rethink of capital's role in healing the world. But behind every billion-dollar move is a cost. For Mike, building ICONIQ wasn't just a professional journey. It was a deeply personal one.
What do they need to know about your journey? Like, I'm talking good, bad, ugly, because you've given me a lot of good PR stuff.
It is really difficult to grind it out for 20 years, right? I mean, I love my ex-wife, but I lost my marriage along the way, right? Like, I put everything into this business and it cost me a lot. And I'm so blessed to have a relationship with her still. And I have an amazing relationship with my kids. But this was my life. And I did it with people I love within the company. And I did it with clients I love. And so I have no regrets, but it is not for the faint of heart. And our first office space was above Kokari in San Francisco, and while I love Greek food, like smelling like Greek food every day, that was not easy either. But it has been the journey of a lifetime, and I think what I'm probably most proud of is that every single day we're asking ourselves, how can we be better? We just came from our offsite a couple days ago, and the level of energy and the level of curiosity and the competitive desire to be better hasn't changed at all since day one. And so you gotta have fire, you gotta have drive, you gotta have conviction. And when you're small and starting, on some cases it's easier. Now people know ICONIQ. We've lost a lot of friends, to competitive firms. And that just means that you gotta work even harder.
From being scarred by Wall Street to transforming it from the inside. From the first coffee with Divesh to managing billions of dollars in capital for tech's most iconic names, from wealth to impact. Michael Anders is showing us that it's not about just how much capital you raise, it's about how deeply you care about what you do with it. Thanks for tuning in to Billion Dollar Moves. If you found value in today's conversation, share it with a fellow builder and funder, and don't forget to check out our show notes for more on ICONIQ Impact's CoLab model. Until next time, keep moving with capital and conviction and making your own version of billion-dollar moves. My name is Sarah Chen-Spellings, signing off.